In a world where luxury often means soaring prices, what if the well-renowned Rolex watches are now becoming more affordable? We'll uncover the intriguing story behind the falling prices of Rolex watches. We'll delve into the factors driving this shift, some of which might just shock you. By the end of this video, you'll gain valuable insights into why Rolex prices are on the decline and how this could impact both buyers and collectors. Don't miss out on this informative journey through the world of luxury timepieces. It's not a secret that Rolex watch prices have recently decreased. For many years, Rolex prices kept going up without stopping. However, recently we saw a small decrease in those prices. Some experts say this decrease is like a market correction. Others think it might be the start of a bigger drop because Rolex prices were going up much faster than other things in the market for the past 3 years. They think that Rolex prices became disconnected from the official Rolex prices. But why are Rolex prices dropping now? Let's explore the real reasons behind this trend. So, what's happening right now? Before this slowdown in Rolex prices, the watch market went a bit crazy. There were way more people who wanted to buy Rolex watches than there were watches available. At the same time, people were excited about cryptocurrencies like Bitcoin, and there were problems in getting the materials needed to make watches like steel and other components. Some watches, like the Rolex Daytona, were being sold for almost twice their official price. Auction houses were making record-breaking deals almost every day, and some people were buying these popular models with the plan to sell them quickly for big profits. But this kind of crazy buying and selling couldn't last forever. After a while, people got tired of paying such high prices, the value of cryptocurrencies went down, prices for things in general went up because of inflation, and the watch market started to feel uncertain. There were also too many people trying to sell their Rolex watches. So now we're in a phase where prices are coming down, and that's what we call a correction. It's like the market is getting back to a more normal and balanced state. The values of prestigious watch brands like Rolex, Patek Philippe, and Audemars Piguet have gone down by nearly 20%. People who bought watches like the highly sought-after Rolex Oyster Perpetual with the Tiffany blue dial, especially those looking to make quick profits, the flippers, are now trying to sell these watches quickly to avoid losing even more money. In contrast, Tudor, which is like Rolex's little sibling, has seen a more modest decline in value, about 1.8%. Another thing we're noticing is that it's taking longer for people to buy and sell watches because sellers don't want to sell their watches for less than what they paid, and buyers are looking for good deals. So, how does all of this affect the sellers and the buyers? For sellers, especially flippers, it's become quite challenging because the prices of the watches they're about to have gone down so quickly. While there's nothing wrong with investing in watches, the main goal should never be just to make money from them. Later on, it's important to remember that watches can be like art. You should appreciate them for their beauty and craftsmanship, not just their potential resale value. On the other hand, for those of us who have a genuine passion for watches and love them for their intricate designs and history, the fact that the watch market is correcting itself can be a good thing. Surprisingly, the vintage watch market is doing quite well and delivering excellent results. Nowadays, if you invest in a vintage luxury watch, you can expect to sell it quickly and at a good price later on. This is quite the opposite of what we saw in the past few years, when the value of modern or contemporary watches was growing much faster than vintage ones. It's projected that by 2026, online sales of watches will account for nearly 60% of the total sales. This means that as more and more platforms start selling watches online, the internet space is likely to become more crowded with options. Even Rolex, a prestigious brand, has recently announced that it's entering the secondary market by selling pre-owned certified Rolex watches in certain Bucharest stores. This move could significantly impact traditional auction houses because customers may be less willing to pay the high premiums that auction houses usually charge. One side effect of the recent boom in the watch industry is the rise in fake watches and fraudulent sellers in the market. These dishonest individuals are eager to take advantage of newcomers who might not have enough knowledge about authentic watches. As a result, clients are now turning to trusted dealers and trying to build relationships with them to buy their favorite timepieces with confidence. A recent report predicts that by 2026, the global market for luxury watches will exceed $100 billion, with second-hand sales accounting for $35 billion of that total. The luxury watch industry is influenced by various factors, including the state of the economy. So, if these numbers turn out to be accurate, there is significant growth potential in the coming years. However, what might change is how companies do business. With many sellers entering the market, competition will increase, margins may become slimmer, and there will be a higher supply of watches. This will push companies to be more creative and innovative to stay competitive. The influx of sellers into the secondary market is poised to alter the industry's landscape significantly. As competition intensifies, companies are likely to face pressures that may compress profit margins and prompt a surge in available inventory. The consequent effect will urge these entities to recalibrate strategies, fostering a climate of enhanced creativity and innovation. In this heightened competitive sphere, survival will hinge on adaptability and differentiation. The market's evolution will demand ingenious approaches to product offerings, service enhancements, and customer engagement strategies, propelling companies to reimagine conventional business models. Amidst these anticipated shifts, the market's allure remains intact, beckoning both seasoned collectors and novices enticed by the prospect of acquiring coveted timepieces. This evolving landscape, shaped by emerging consumer behaviors and market dynamics, promises an exhilarating journey for enthusiasts and investors alike, encapsulating both risk and opportunity within its intricate mechanisms. It's worth noting that many investors who typically focus on stocks and shares sometimes overlook the luxury watch market. However, it's important to recognize that the luxury watch market is generally more stable than the stock market and less volatile than cryptocurrencies. While some watch prices have undergone corrections, which was expected considering how much they had previously risen, the overall trend in the luxury watch market is positive. Demand continues to surpass supply, and this fundamental aspect remains unchanged. In conclusion, market fluctuations are not unusual in the world of luxury watches, and having an understanding of market trends is crucial for making informed investment or buying decisions. As Rolex watch prices continue to decrease, both sellers and buyers should adapt their strategies accordingly. Whether you're a flipper adjusting your approach or a buyer seeking a good deal, staying informed and being mindful of market dynamics is essential. While recent price drops have been significant in terms of both percentage and amount, it's important to remember that Rolex watch prices still remain considerably higher than their official Rolex list prices, which is a noteworthy situation in itself. In the end, what do you think of this news surrounding Rolex? Let me know your thoughts in the comments below. And to stay updated with the latest news in the watch industry, be sure that you like and subscribe to Luxury Focus. Thanks for watching and see you at the next one.